You've probably heard the same trading advice over and over. Follow the trend. Indicators will make you rich. Retail traders move the market. But what if I told you that most of this advice is actually keeping you from being profitable? Today, we're exposing the biggest trading myths that are making you lose money and breaking down the real strategies smart money traders use instead. When I started trading, I followed every popular piece of advice out there: support and resistance, tons of indicators, and placing trades where everyone else did. But instead of making money, I kept getting stopped out, missing moves, and second-guessing my trades. That's when I started studying how institutions trade. I realized that most of the strategies retail traders follow are actually designed to trap them. So I changed the way I approached the markets, focusing on liquidity, market structure, and smart money concepts. The difference was insane. Fewer losses, better entries, and more confidence in my trades. By the end of this video, you'll understand the biggest trading myths that are holding you back and how to break free from them. You'll learn how to stop getting trapped, avoid overcomplicating your strategy, and think like an institutional trader. This isn't just about learning new concepts. It's about changing the way you approach the markets so you can start trading profitably. If you keep following these myths, you'll stay stuck in the same cycle, chasing bad trades, getting stopped out, and wondering why nothing works. You'll keep overanalyzing, jumping between strategies, and losing money to market makers who know exactly how retail traders think. But if you start trading like smart money, you'll stop falling for fake breakouts, spot high probability setups, and finally gain consistency. So let's get into it. The first myth is that a lot of traders believe that basic support and resistance levels are enough to trade successfully. They draw horizontal lines and expect price to magically reverse there every time. But the truth? Banks and institutions know where retail traders place their entries and stop losses. Instead of relying only on support and resistance, smart traders look at liquidity zones. Smart Money Toolkit highlights areas where the market is likely to grab liquidity before making a real move. If you're entering at obvious levels without considering liquidity sweeps, you're probably getting stopped out before the real move happens. Here's what you want to do. Instead of placing your trades at the exact support/resistance level, wait for a liquidity sweep first, then enter when price confirms direction. Next myth is that many traders think that stacking multiple indicators will improve their accuracy. They'll add RSI, MACD, moving averages, Fibonacci-Bollinger Bands, all at once. But what happens? They get conflicting signals, overanalyze every trade, and never pull the trigger. Professional traders don't stack indicators. They use a few key tools that complement each other. That's why SMRT Algo Pro V3 combines the most essential trading elements: buy and sell signals, trend confirmation, and market structure, all in one tool. Instead, use only a few indicators that serve a purpose. Pro V3 already integrates multiple indicators, so you don't need 10 extra tools cluttering your screen. The third myth is that retail traders love to think that their collective trades influence price action. But the truth is, institutions and market makers control the game. Big players don't care about your 0.1 lot trade. They're moving the market with millions or even billions of dollars. Instead of trying to trade like a retail trader, you should be following what institutions are doing, and that means focusing on liquidity, order blocks, and market structure shifts. So instead of trying to guess where the market is going, use tools like Smart Money Toolkit to track what institutional traders are doing. The last and most important myth is that most traders think that the more they trade, the more they make. But in reality, overtrading is one of the fastest ways to blow an account. The best traders don't force trades. They wait for high-quality setups. With SMRT Algo's daily single trade indicator, you can find one great trade per day and avoid overtrading. Less stress, more consistency. Focus on quality over quantity. Instead of taking 10 low-quality trades, aim for 1-2 high-probability trades per day. If you're still struggling in trading, it's probably because you're following these outdated retail trading myths. The real edge comes from thinking like smart money, understanding liquidity, market structure, and trade confirmation. Want to trade smarter? Click the link below to get access to SMRT Algo indicators. And start trading like a pro today. If this video helped you, hit the like button, subscribe, and comment below. What's the biggest myth you used to believe?